Hi, my name is Rob. In this video, we're going to walk through the structure of a fix and flip deal. This video is intended to help beginners understand what the loan is going to look like and understand all um, the different costs associated with the loan, how to break it down, and ultimately also how to calculate whatever expenses would be coming to you on your own fix and flip deal. So the majority of hard money fix and flip loans look like this. They finance 90% of the purchase price and 100% of the rehab cost. This particular deal um, bottoms out at 2% origination, 7% APR, and in this case I'm offering a 2% broker fee. Origination is a charge by the lender on the overall deal size. So um, this deal size is $140,000. So it's $90,000 for the purchase price, 50 for the rehab, and we take that times 2%, and we come to $2,800. So we also have the different categories of the loan um, that we're going to walk through. We have property costs, which are basically the broad overview of what the deal looks like. We have closing costs, which is what is paid at closing, different costs associated with the loan. We have payments that are made throughout the duration of the loan, and we also have some selling costs that are incurred when the property is offloaded or exited by the investor. All right, so our deal price is $100,000. And this, by the way, these numbers, this 9100, this typically applies to 1 to 4 unit residential properties. And it's very common throughout the industry. It could possibly extend to other types of properties, but generally speaking, it is applied to 1 to 4 unit residentials. All right, so in our example here, this property is priced at $100,000 for purchase, $50,000 rehab cost. Um, Again, it's financed at 90% of the purchase price. Loans total is $140,000. ARV is $350,000. Profit before selling costs, we'll get to those in a second, is $210,000. One thing to note here, rehab cost is reimbursed in draws. So there are a few lenders, very, very small percentage of hard money lenders will advance funds to do the work. Most of them require the investor, borrower, sponsor to use their own funds, and they're reimbursed in draws. So, for example, if our if our investor here, borrower, had $20,000 to work with, they would do 2 draws of $20,000 each and 1 draw of $10,000 each, bringing it to a total of $50,000. Alrighty, so it's time to close the deal and pay, make the various payments to the escrow company or title company, and take ownership of the property and start the rehab work. So at this point, the borrower would write a check for their 10% down, their origination costs, their broker fee. Broker fees for us vary from 1 to 3%. They could be more, they could be less, depending on the deal size. In this case, we're charging 2%, which seems like a reasonable and common fee that you might see for a deal size like this. Almost pretty much every lender out there hard money lender is going to charge $1,000 to $1,400 for loan processing, and some other lenders might charge more. We also included one other fee that is assessed in probably every single loan out there. $45 for wire transfer for processing the payments from the lender. This is what by some people is referred to as a junk fee, and some lenders have quite a few of them, and they're basically itemized so you can see different fees that are often paid to third parties, and that's why they're listed individually. Anyway, in our example here, the borrower is going to pay its total of $16,745 at closing. This is the amount that the check would be to the title or escrow company. And at this point, they take possession of the property and they begin the rehab work. So again, our interest rate is 7%. So the borrower is going to be making interest-only payments on funds advanced or paid out by the lender. So let's say, for example, in the first month, at the end of the first month, the borrower has not requested any draws. So they've just been working and haven't requested any money to be reimbursed. So they will pay interest only on the $90,000 that was advanced for the purchase of the property. And that is a total of $525. End of the second month, they've now advanced $20,000 for work. So that's added to the $90,000, and we're now to a monthly payment of $641. At the end of the third month, we're now looking at we've now advanced the full amount of the loan, the rehab work is fully reimbursed, and the borrower is now making an interest-only payment of $816. And hopefully we're now done. We're ready to sell the property, exit, and get the loan paid off. At this point, this is how much interest has been paid. By the way, the average length of a fix and flip in America is 3 months. So in this case, the borrower has also made 3 draws. So draws typically cost between $300 and $500. In this case, our borrower is paying $300 per draw. They've paid a total of $900. So now we're ready to sell the property, and this also comes with certain costs. We're going to assume that the investor or borrower is not able to sell the property themselves, so they're going to hire a realtor to do it. And this can cost up to 10% of the value of the property. So to be safe, we're going to calculate up to 10%. So the property is valued at $350,000. So we're knocking off $35,000. And these fees are split between a number of parties again. So realtors tend to charge between, from what I'm hearing, 2.5% up to 5%. And legal escrow costs could cost up to 5% as well. So we're looking at our profit margin now. It's a very, very healthy profit. This is actually a very rare profit margin to find on a fix and flip deal. It's very, very high, but it looks good on paper, and in any case, this is our example here. We have now subtracted from our selling cost from our sale price the $35,000 for selling costs, the closing costs, the draw fees, and the monthly interest, and we're left with $162,118. Very nice profit margin. So whenever we send out quotes, our lenders include cash reserves. So what this means is they'll tell you how much cash is required to have on hand after the loan is closed, so you can assess whether or not you're able to afford the deal. Borrowers are also required to show proof that they have the cash reserves to do the loan, just to make sure that they're in a safe place to take out the loan, do the job, and pay it back in a timely manner. If you need help with your loan calculation, or you need a quote for your fix and flip, we're very happy to do that for you. Just send us an email and we'll get back to you as soon as we can. Hope this was helpful, and thank you for watching.